Well, good evening and welcome to the Markets Live by Moneycontrol. You're watching the closing bell. I'm Santosh Nair. Well, it was a volatile start to the first trading session of the year. The BSE Sensex and the NSE Nifty hit record highs earlier during the day. However, they ended on a flat note. The Sensex touched a high of 72,561 points, while the NSE Nifty touched a high of 21,834 points. However, sentiment for small and mid-cap stocks continued to remain strong across mid-cap, small and micro-cap stocks. The indices were up by close to about 0.5% each, clearly showing that there is a lot of retail interest in all these sectors at this point in time. In sectoral trends, overall the Nifty Bank ended in the negative territory, but at the same time within the sector you saw good buying interest in PSU bank stocks. They continue to find takers even today. And among the other good performers of the day, you had metal, realty, oil and gas shares also, which registered smart gains. The India Volatility Index was up by close to about 1% to 14.64. The volatility index is also known as a fear indicator, and a higher reading means that the market is getting a little cautious, and that was evident in the way which you saw sharp swings during today's trading sessions. And among Nifty stocks, the big gainers of the day today were Nestle, Adani Enterprises, Tech Mahindra, Adani Ports, Coal India. And among the prominent losers, you had Eicher, Bharti Airtel, Mahindra and Mahindra, Bajaj Auto, Hindalco and HDFC Bank. Overall, auto stocks were under pressure for most part of the session, and the index finally closed on a negative note. And among the prominent gainers in the mid-cap space today, you had Wockhardt, which rose close to about 11%. Other prominent gainers included PC Jewelers, Jubilant Pharma, EIL and also Castrol. So these were the stocks which rose by close to about between 4 to 5% on an average. And to make sense of today's proceedings from a technical perspective, I am now joined by Milan Vaishnav, who's with Chart Wizard and Gemstone Equity Research. Milan, welcome to the show.
Yes, Santosh, good afternoon. Wish you all a very happy new year.
Happy new year to you too, Milan. So Milan, tell us, how do you view today's trading action?
In fact, I would be inclined to say that markets have started off a new year on a very classical technical note. We might have seen the markets marking incremental high at 21,834. But at the same point in time, we should not overlook the fact that the last phase of up move over the past 15 days has come with a negative divergence on the lead indicator. So there are chances that the markets may put a potential top in place anytime soon and may find itself consolidating in a very defined but slightly broad range. So what I feel is that we might continue to see minor incremental highs, but so long as 21,800 is not taken out convincingly, we can expect a very good amount of resistance coming in at higher levels between 21,800 and 900 area. And we also should not forget that we have deviated a lot from the mean, and the daily charts remain quite overextended from the structural point of view. So by and large, I feel that we might be in for some consolidation. In fact, some consolidation is imminent and overdue, because we need some consolidation so as to make this recent rise a little bit healthy in nature. Otherwise, things are getting a little difficult, and it might lead us to some violent profit-taking bouts going ahead from here.
Milan, you mentioned a point about a negative divergence, market going up with negative divergence. Could you just elaborate on that point a bit?
Yeah, of course. See, if you look on the daily charts from beginning December 10th, 15th until today, you will find that the prices have marked incremental highs. I mean, they have continued marking higher highs. But at the same point in time, RSI, which is a lead indicator, has not marked similar higher highs. In fact, either it has made a similar high or it has even gone on to mark a lower high. So this happens when you find the market rising with weaker internal strength. And if while the price are marking higher highs and RSI is not, this leads to an emergence of negative divergence of this lead indicator against the price. So generally, being a lead indicator, it is the price that will follow the indicator, and this can be taken as a bit of early signs that we might be in for some defined and raised consolidation at these levels.
So, Milan, tell us, if you look purely at sentiment, the interest among retail investors seem to be pretty strong even now. But at the same time, as you said, the charts are giving signs that probably the market could be nearing its top. So, what are some of the warning signs that retail investors should be mindful of? What should they keep an eye for?
You need to keep an eye on the quantum of profits that you are sitting on. So, for example, I would suggest that retail investors should very vigilantly keep trailing the stop losses in such a way that if the market starts to decline or consolidate, they must make sure that they are able to book profits up to 70% of their peak profit. So, for example, if one is sitting on 100 rupees of profit, and if the market starts declining, they must trail their stop losses in such a way that at least they are able to come out with rupees 70 in hand, so that the major chunk of the profits stand protected. That is point one. Second point, when the charts are giving this kind of mild signs, they should also remember that not all up moves are supposed to be chased. There are certain kind of up moves that one should focus more on profit booking and taking money off the table. So these are the couple of things that a retail investor should be very mindful of.
So, Milan, tell us which of the three pockets look most susceptible to profit to a sharp correction at this point in time: large caps, mid caps, or small caps?
I believe that the focus is that relative strength is now shifting from mid and small to the large caps. So one is sitting on decent, handsome profits on small and mid caps. One should focus on taking money off the table, protecting the gains at current levels, and start moving towards the large caps.
Okay, thanks for that. Milan, also tell us about some of the stocks that you track closely, starting with ITC. How is it looking on the charts?
ITC, it's a typical defensive pick from my side. I expect the FMCG pocket, which has traditionally remained a defensive one, to start doing well. There are mild and early signs of relative strength improving. So ITC and Hindustan Lever, these are the two stocks from the FMCG pack that I am looking at. ITC can be bought at current levels. Over a short to medium term, one can expect 490 to 495 levels on it.
And IRCTC, that's also a stock that's been showing strength of late. How do you look at that stock?
Yes, IRCTC is a very stock specific pick, nothing to do with my sectoral bias. So that's a very stock specific pick. IRCTC has given strong gains from 725 odd levels until 890, 900 levels. It has been consolidating over the past couple of days, and now it's showing signs that the uptrend might resume in this stock. So I'm also looking at IRCTC with the price targets of 950 over the short to medium term.
Milan, within the banking pack, we are seeing a divergent trend. Overall, the index closed in the negative today, but you're seeing a lot of strength among PSU banks. What's your outlook on PSU banks?
Again, when you see Nifty PSU index on relative rotation graphs, so one would observe that they were lying in the weakening quadrant. So what that meant was that individual performance from the components might come, but overall the sector was weakening so far as the relative performance against the broader markets was concerned. But now we are seeing some shift in relative momentum of PSU index against the broader markets, and therefore we might see that within the banking space, some focus might return on the PSU banks, whereas the large cap private sector banks like ICICI or SDFC might take some breather. I'm not saying that they will decline, but the relative performance would be far better in PSU bank than this large private sector names.
Within the PSU bank pack, are there any specific stocks that you're closely monitoring on the charts?
Yes, I'm looking at SBI and Bank of Baroda.
And how do they look?
Both look set to, there might be some short-term consolidation in, I'm sorry. There might be some short-term consolidation on both of these names. SBI can be accumulated between 635 and 640 levels. Expect a target of 660 plus. Whereas Bank of Baroda, we can fairly expect the targets of 245 to 250 on the stock.
Well, the other sector which has been doing well of late has been the oil and gas pack. Any picks there?
Yes, from oil, gas, and energy space, my pick would be again a large cap. That would be Reliance, and there are reasons to it. Reliance basically it has underperformed on YTD basis, on year-to-date basis in 2023 against both the Nifty Energy Index and the Nifty. So Reliance has underperformed both of these indices. Now in Nifty Energy Sector Index, Reliance has the highest weight, and in Nifty it has got the second highest weight. So now again on the weekly charts, it is now staring at a multi-month major breakout on it. There might be again some consolidation in 40, 50, 60 odd rupees range, but Reliance per se is staring at a multi-month breakout on the weekly chart. So that stock is something that I'm looking at, and I'm expecting targets of 2850 to 2900 in the short term. Not in the short term, but short to medium term, one can say.
Milan, you spoke about the stocks that you're bullish on. Any stocks that are looking weak on the charts?
Now, again, looking on the week on the charts, I would not suggest any names that one can go short on, because what happens that when the markets take a breather, it means that one should focus on booking profits on the long side, and that doesn't necessarily mean that we short the markets. Markets are not meant to be shorted as of now. The short opportunities are likely to be very shallow and very short-lived. So I would not recommend any names to go short on.
But if that being the case, Milan, then does it make sense to kind of hold on to the position for a little longer if the corrections are going to be short?
Yes, see, the answers would be different for a short-term trader and a portfolio investor. For a portfolio investor, the best thing he or she can do would be to keep trailing the stop losses at certain level and exit that particular pocket or space where they are left with 70% of the peak profits. But for trader, it's necessary that they move out from one sector and go to some other sector in a little rapid way, because their focus and objective in the market is different than a portfolio investor. So the answer would be a little different for both of these segments.
Well, it was nice speaking to you, Milan. Thank you so much for those insights. I'm sure our viewers would benefit from them.
My pleasure. Thank you, Santosh.
Well, the message coming from Milan Vaishnav is that market appears to be poised for a correction going by the technical chart. So some amount of profit booking would be in order. Well, that's all that we have in this edition of Closing Bell. Thank you for watching, and we'll be back with you again tomorrow morning.